Hey everyone, welcome back to Mark Loeffler Experience. We got my good friend and one of my mentors, Omar Khan, back on the show. We'll link Omar's first video down below, and today we're going to be talking about why Omar's selling all of his real estate and betting on the fourth industrial revolution, how he's making so much money on the markets, what he's up to today, and we're going to talk about how you started your own hedge fund. So you're selling all your real estate.
Well, first of all, thank you, Mark, for so much for having me on your podcast. You're one of the people I really respect in the real estate game, and you've been at it for a long time. You've accomplished a lot, built yourself a nice portfolio, and also I know that you trade. You're an investor in the stock market, so we're very much aligned. Just a clarification, I'm not selling all my real estate. I'm selling single-family homes. Why? The reason is because in Ontario, Canada anyways, the laws are very much pro-tenant and anti-landlord. So as an investor, I have to look at where my dollars are best allocated. Right now, it's not in the real estate market.
So you're looking for a return on equity.
Absolutely, always. That's our job as investors, right?
So I'm going to link that video down below too. It's one of my first videos, so actually go back and laugh at that one because I'm sure, well, I mean, we didn't have the mics, we didn't have the fancy cameras back then. We didn't have the lights.
Setup, right?
Yeah, we got this. I mean, look, we got books and metals and plants and everything. So we'll link that down below. Go check that out, ROE versus ROI. Let me know if you want me to update that video too. So, I mean, you're selling all your single families, so you're going to still have a tidy little portfolio.
I still have a very healthy real estate portfolio, but I find in the commercial space, at least there's a lot more, it's a lot more landlord friendly, minus the residential component. You know, you can evict someone. On the residential space, I find right now, obviously pandemic induced, the flexibility the landlord has to evict people or to go after them for compensation for rent not paid is almost non-existent in Ontario. So my job as an investor is simple, right? Our job.
Yep.
Our job is to look at both asset categories and say, where is my capital allocated best? Where do I get the highest risk-adjusted rate of return? To me right now, based upon the numbers and the situation in terms of landlord-tenant friendly rentals, I think it's not in the real estate market, personally, right?
Yep.
And that's my job. So that's where I am right now.
Yeah. So, okay. So selling all his real estate. We just heard it here. And you taught me how to sell puts.
Yes.
Right.
Many years ago.
Yeah. You told me to read Derek Foster, Money for Nothing, Stocks for Free.
That gives you a good start. Yeah.
Yeah. It's definitely the basics of it. And then Lee Lowell, Get Rich with Options. Read the two.
Now, those two by themselves, by the way, won't do, it won't give you what you need to get. It'll give you a good start, but it's certainly not going to give you everything you need to start trading.
Well, I mean, you can start.
Yeah.
But there's so many more nuances and different things, and they'll give you the basic outline. And I know that obviously you teach at Theta Trading, and this is not a plug. That's what they teach. They teach a specific strategy around it and and exactly which stocks to follow and that type of thing, right?
Yeah, and then the reason we teach it is because we when I used to see you at RAIN meetings back in the day, we'd be going talking about real estate. And I would see everyone trashing the stock market. Oh, the stock market, you can't make any money, including the presenters.
Well, not that you couldn't make money. They said you couldn't leverage.
Oh, you can leverage, and you can
100% you can leverage. I mean, look at my buddy Mike Rosard out there crushing the leverage.
Yeah,
good and bad.
And leverage can be good and bad, but that's not what they said. They said, most real estate investors, just generally speaking, most real estate investors shun the stock market. It's not because you can't make money. You can make plenty of money. It's because they don't have an understanding of how it works and how to profit from it. You clearly do, but most people do not, Mark. Would you agree?
Well, most people who are not investing, yes.
Exactly.
But I mean, for me, this is a huge diversification for me because I have a lot invested in real estate and real estate assets.
Yep.
Well, a lot less now. Actually, a lot less the day after this video comes out, knock on wood, one of my 29 units sells. We've talked puts and calls, and we've had different people on the show talking about that type of stuff. And if you guys want to check out the Theta course, that's not why he's here. He's just here to give content and provide value to everybody. We'll put the link down below. You guys can go check that out. I know they do free webinars too. Do you want to talk fourth industrial revolution first, or do you want to talk starting a hedge fund?
Why don't we go with the upcoming changes that society is about to undergo right now?
Okay.
Yeah.
Obviously, technology is changing. Rapidly, and the way we use it.
Now, speaking of the fourth industrial revolution, the changes that we're about to undergo as a society, as a species right now is unprecedented, right? You look at the transformation from gas-powered cars to electric. That's a huge one. cars that are now going to drive themselves. That is coming, whether we like it or not, right? These cars are going to drive themselves and they're going to be on electricity. And it'll be powered mostly by the sun and wind, so renewables. Then you have artificial intelligence. We've already seen this recently with Tesla, where they introduced their Tesla bot. Now, it's a prototype right now, but imagine down the road, right? Imagine down the road where you have some artificial intelligence beings able to do work for you in your house, constructing a project for you. Let's say you want to do a BR4, right? Instead of hiring a crew who's going to call in sick and one guy's got a hangover.
BR4.
BR4. What do you want to call it? Right?
Oh, a burr.
Burr, I call it BR4, but you call it Burr, we call it whatever you want. BRRR, fine. We'll call it whatever we want.
You're obviously much cooler than I am. I've never heard that before.
Yeah, instead of saying Burr, I just say BR4. So imagine being able to hire a crew of robots that are autonomous, that are intelligent on their own, that they can do that work for you.
And it's not like the guys, I can't say it.
Yeah, he's not going to call him sick. He's not going to get hungover the day before. Oh, I lost my driver's. You and I have heard every excuse in the books, when doing projects, right? Yeah. Like, I've heard every excuse. I'm like, and it's not obviously everybody, but it's a wide scale problem.
You look at like AI, like they're using that type of stuff like in their algorithms to, sell to you, to get, it's like, hey, you might like this music, or I have a wine app and it tells me you might like this wine, right? And it sells me wine and I buy it by the case and it's, mostly delicious.
This will be a lot different, Mark. This will be like, imagine in your house you have a helper, right? Say, hey, you provide that helper with the groceries. You go to the grocery store, grab this for me. It'll get in your car, go do your groceries, come back. Hey, clean the house up for me when I get back. You're already seeing this. If anyone has that little iRobot that goes around your house and vacuums up, gets to know the layout of your house, that is the first initial phases of artificial intelligence. So you've got EV, you've got artificial intelligence, you have robotics. So things will be produced without the need for humans. And there are many more changes that are coming. They're going to profoundly affect the way we live our lives, right? If artificial intelligence and the ability to have robots do work for us, there is literally no limit to GDP growth. Think of that, right?
Yeah.
There is no limit. Let's say you want a bridge constructor or you want a house constructor or a project. You have to rely currently on humans, right? There's a limitation with it.
Well, there have to be enough robots. You got to build enough robots.
Correct. You have to build, but assuming that's done down the road.
And then we get into Terminator, and
that's the ugly side of it. Yeah, that could be a very nasty side. Hopefully, that side is contained and it doesn't turn into the ugliness that some people are fearful of, and myself included. What it tells you is the capacity for GDP growth for the economy is limitless if that happens.
Yeah.
So there will be literally trillions and trillions of dollars to be made, right? And progressing humanity forward. Imagine, elderly people being cared for. Another, part of the fourth revolution is genomics, right? The healthcare space. We are about to see a huge transformation in the way healthcare is done. Right now, currently, it's very traditional. It's been kind of stagnant for the last many 100 years.
Well, not 100 years, but there's been a lot of
there has been progress, but it's been incremental progress. It hasn't been wide-scale progress. Now, what's going to happen in the future, instead of going to a doctor, you're going to go to a geneticist. They're going to look at your genome sequencing. They're going to say, okay, well, here's a potential problem you have today, and here's one that you may have down the road. So instead of treating it with pharmaceutical drugs, you treat it at the cellular level through CRISPR gene editing. You basically edit out the part of the gene which is not functional or just not working well, and you replace it with a clean, healthy version.
That's not when they put the clean poop in you.
That's not when they put the clean poop in you. But imagine. So think of this.
You've heard of that, though.
Yeah, I've heard of that. Yeah. So people living longer, cars driving themselves, workers working for us. This is going to change society drastically in the next 5 to 10 years.
Yeah. Well, okay. And this is not like that channel yet. What are you doing right now to put yourself in a position to be making money off that? And obviously you're educating yourself on what the change is.
Of course.
What recommendations do you have for all, I don't know, let's say 10,000 people who watch this video, and then comment down below when you get rich from his recommendations.
Yeah. So what I would suggest to you is look at your overall portfolio, look at your overall investments, right? Ask yourself, where am I going to get the highest risk-adjusted return? So that's why I sold off a lot of my real estate. Because again, for me to free up all that capital, when real estate, I believe, it will go up over a period of time. I'm not saying it won't. But what is my risk-adjusted rate of return? Right now, the tenants have all the rights, especially in Ontario. Interest rates are low. Rent to market value the numbers are not favorable for me. So I have to look at it and say, Where is my capital best allocated? Right now, if I objectively look at the changes we're about to undergo as human beings and the amount of profit and the amount we can move humanity forward, it's going to be enormous right now. So that is why I'm selling my real estate off and investing in these companies that are part of this change.
Obviously, you named one already.
Yeah, Tesla, right now, it's, in my opinion, it's not meant to be stock advice. Please don't take it as such.
Do your own due diligence.
Yes.
Don't take anything we say.
Correct.
Check with your advisor.
Yeah, we're just a couple of guys chatting right now.
Yeah, we're just a couple idiots who know how to make money.
Yeah. So the idea right now is Tesla. If I think Tesla's going to be the most valuable company in the world, which means it could go up at least 4 times in the next few years, the next 5 years, in my opinion. That would make it the most valuable company, overtaking Apple. Now, if that happens, if I can make 4 times my money, what am I better off there, or am I better off in the real estate market? I again, objectively have to look at where is my capital. That's our job as investors. Where is my capital allocated best? For me, because of the changes that are about to occur in society, I want to allocate my dollars towards these companies that are going to be part of this massive change that's going to come up. Whether we like it or not, these changes are going to happen.
For sure. All right. So Tesla is one of them.
Yep.
What are some other ones you're looking at long term right now?
Long term is lots. Apple's very well positioned, I think, in my opinion. Facebook with the metaverse and the artificial intelligence, augmented reality.
I did make a lot of money on Facebook when it was down yesterday because they were out, and I just sold puts on it.
Yeah, absolutely.
$300. What did I do? November 16th.
310s, 315s. I did the 315s yesterday for November 29th. November 19th, excuse me.
I did 300s.
Yeah.
I got paid $9. That was good.
Yeah, I think I'm
safer.
I got paid 13.5. It all depends on how aggressive you want to be. You can ratchet your risk up and down. But the point is, ask yourself a simple question. What was that return? About 3%?
3%.
Yeah. No, that's a pretty good return, right? And what's the worst thing that'll happen to you?
I own Facebook at $300.
At $300, and you got paid
$391 or $291,
right? Because you got paid $9 for it.
Yeah.
So that's my point, right? We have to look as investors. The problem with investors most often is investors only understand one asset category, whether that be real estate or stock or whatever it may be. Or most investors don't understand real estate, stocks, private equity, venture capital. Once you start putting the whole picture together, you're able to make intelligent, rational decisions on where to put your money so that you can get the highest rate of return with the least amount of risk.
So my question is, when are you going to be like Kevin O'Leary and like be on CNBC every week? And
I have no desire for fame. None. Because fame comes with all kinds of hosts of
Well, though, I mean, here's the thing: you do own a hedge fund, and with fame brings dollars into a hedge fund.
Right. Well, actually, I don't own a hedge fund. What happened is we started a fund which that mimics our Theta strategy, which is Theta IQ. So it's theta-iq.com. We are the brain trust for the hedge fund. That is correct. We provide the investment advice for the hedge fund because if I'm on the trading side of it, I cannot be involved in both sides of the business because of compliance issues, right?
Yes,
and obviously that's something that we are very, very strict about. But yes, absolutely.
Yes, you have to be. Yeah.
Yeah, absolutely.
And obviously, I don't run or advise a hedge fund, so I can say whatever the hell I want and do whatever the hell I want.
Exactly.
So,
whereas I can't. So the idea for the fund is to take advantage of these transformational changes that we're about to see, right? Now, if you look at a lot of what I consider to be very intelligent investors throughout the world, like Cathie Wood, right? Exactly the same thing. We talked about that. So these people are at the forefront of this change. Our fund, the fund that we advise on, Theta IQ, which is the Theta fund, it's the same thing, right? We want to be a part of these companies. They are still at their infancy. Even a company like Tesla has only begun to scratch the surface.
I mean, you look at it, they got 2 factories going.
And 2 more on the road.
And not even just 2 more.
2 more with far greater capacity, 4 times the capacity.
The building in Texas is the 2nd largest building in the world right now.
Yeah.
It's 7 stories.
Yeah, it's crazy.
This thing is massive. I'm looking forward to that and the numbers. And I mean, obviously, I'm a big fan of Tesla too. Yeah. And I got someone into investing in Tesla way back when.
Well, my concern with Tesla initially was, again, when you don't understand it, you should never invest in something you don't understand. So if
I understood it a lot better than
you did. Yes, absolutely. I was late to the game on Tesla. But since I've become more acclimatized, and this will always be the case with me, I'd rather be late on an investment than invest in something I don't understand. Same thing, I don't have Bitcoin, I don't have a lot of other companies or a lot of other asset categories. You should never invest in anything that you don't understand. Clearly, you understood it before me, but I'm fully on the bandwagon now. Yeah. I own a Tesla. My wife owns a Tesla. There's no better way to do research than that.
Any parting words for the audience? What are your three biggest takeaways that if they just did those three things, then everything else becomes irrelevant?
Yeah, I would suggest to the audience to learn how to profit from the stock market. High quality companies using naked puts as a specific strategy, right? That is when you are able to acquire stocks at or below their current market value and getting paid a lot of money. That's exactly what Mark did yesterday with Facebook, right? He agreed to buy Facebook for about $15-20 less than it was trading for at the time. About $20.
$20, yeah.
$20.
I did it at $3.19.
$3.19. So
I actually hit the bottom.
Right. He goes. So he agreed. Now think about this. Facebook's at $3.19. Mark agrees to buy it for $300. He got paid 3% for that.
$9.
$9, 3%. Think of that, for a little over a month. Now, that 3% will accumulate and compound and compound.
I will probably buy back that tomorrow.
Yeah, you could buy it back, and the thing is you'll still lock in a nice hefty profit, though, right? Yeah. In a shorter time span, so your return
2 days, yeah,
will actually be far greater than 3%.
Yes.
3% is for the entire month period, right?
Yep.
So the three takeaways: learn how naked puts work and how to profit from them. Learn about this coming up industrial revolution that's going to transform the way we live as a society, the way we live as human beings. This is going to be a profound change. And lastly, learn to never fall in love with investment. Learn to objectively look at all your investments and make a rational, logical decision based upon the highest risk-adjusted rate of return.
Because at some point, that might be real estate again.
That, of course, absolutely, exactly. Yeah. When we were buying real estate years ago in Hamilton, right?
$100,000.
Yeah, exactly.
House, yeah.
It was a no-brainer, right? Yeah. You're buying a house for $140,000. It rents for $1,450. It's a no-brainer. Your all-in costs were like $650, $700, and that's why we bought a lot of real estate, right? Because the numbers made sense. Now the same house goes for let's say 50. Rents are higher, I agree, but they're not 3 times higher, which the price is, right? Yeah. Rates have come down. The numbers simply don't make sense. So you have to learn to objectively look at your investments and say, where's my dollars allocated best? Do not fall in love with an investment just because you're a real estate guy. I say, I have to be real estate. Just because you're a stock guy, it doesn't always have to be stocks. You're right. At some point in time, we're going to get further back into real estate when the time is right, when the numbers make more sense.
Yep.
That time is not right now, though.
Well, for some things.
For some things. For commercial properties, maybe some. You can find different cities. Yeah. Of course, yeah.
Like, there's lots of opportunity.
There's always opportunity. Yeah. But that's my point, right? So my point is, always look at where you can get the highest rate of return. You said you invested in Calgary, right? How come you didn't invest in Toronto? Numbers don't make sense.
Yeah.
Right? As simple as that.
Well, and then landlord-tenant bureau.
And landlord-tenant bureau, which drives me mental, by the way. I completely agree with you. So landlord-tenant bureau, numbers don't make sense. You made a rational, logical decision. Say, look, my capital is best allocated in Alberta.
Yep.
Makes complete sense.
And once I refinance that 15 unit, which we're doing right now, I'm going to do the video and I'll give you guys all the update and you can see how we did out there.
I'm looking forward to seeing it, Mark.
Awesome. Well, Omar, thanks so much for coming in. We appreciate you coming on again, and thanks for traveling into the studio. This is always better than that crappy Zoom.
Zoom, yeah. Well, first of all, Mark, again, thank you again once for the invite, and I appreciate you having me on, and I look forward to being on in the future.
All right. Cheers, brother.
Thank you.